Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of core banking software provider Thought Machine. Paul Taylor, great to have you with us.
Yes, thank you for asking me. Always good to speak here.
All right, so before we get cracking, we are going to learn a little bit more about Thought Machine. So to begin with, Paul, just tell us what it is exactly that you do.
Yes, so Thought Machine is a cloud-native core banking company. We provide platforms that run the heart of the bank, as in the core banking system. And a core banking system is basically the product engine of the bank, as in the thing that calculates how a bank account works, mortgages, and it covers every type of account, mortgages or credit cards or current accounts. And it also is the main ledger in the bank. So it is the system of record for the bank and the kind of ground truth for all the transactions in the bank. So with any kind of banking system, I mean, they all have some sort of core banking engine at its heart. But traditionally, banks have used really dilapidated technology, and if it was bad in the past, it's got even worse because many of them are stuck on mainframe solutions. Many are stuck on solutions that are very far away from the technical solutions that we use today. So that Thought Machine's mission is to change all that, and we have built a core banking engine from scratch. It is all cloud. It's all based in the cloud. It is all cloud native. And our clients, we're a B2B company. Our clients are banks, and we sell to banks, and that lets them be free of the legacy issues and go and build the technology stacks that they want.
And you're UK headquartered, but I think even a cursory glance at your website shows that you are very global. I saw Vietnam, Hungary, and Italy all on the same kind of page. Just how global are you?
It's surprisingly global. So I'm speaking to you from New York. So Thought Machine has got its headquarters is in London, and it's got two main offices elsewhere in New York and in Singapore. But we are commercially active in a lot of countries. So I won't name them all, but something like United States, Canada, Japan, Vietnam, the Philippines, Australia. Italy, as you just named, Sweden, and it is all banks. All banks at a certain extent, operate in the same way. They all take deposits. They all do loans, and of course the details vary from country to country. But it is an international, global business, and most banks at some level, require the same solution. So it's natural we expand, but trying to keep Thought Machine expanding at the rate of demand is always a challenge. And of course, because of the pandemic, travel opportunities have been limited. So we have more offices. We have more offices open in countries that I've managed to visit yet.
Wow. And of course, in 2021, I mean, you mentioned the US, you announced a deal with JP Morgan, the biggest of the lot, meaning it's going to replace its core banking software technology with Thought Machines. How big a deal was that? Not just in financial terms, but in terms of validating your model, or was it just another day at the home office?
No, it was not another day at the office when we signed JP Morgan Chase. We've been working with their team for quite a while. All banks do extensive due diligence and proof of concepts and testing of the platform. And of course, Chase so our main part of contact was the main retail bank, Chase. The Chase team were very hands-on and very engaged, and so we did it. But it doesn't matter if you're a large bank or a small bank; you still got the same problem that you cannot realistically continue on the technical stack that you've got. So, just like many other banks have been highly acquisitive, like many other large banks have been highly acquisitive over the years. So there's a lot of complexity that's arrived inside the bank. So the challenge was, could we build it? Chess wanted to move to the cloud. It's been very clear that it's going to do that. It doesn't see the cloud. It sees the cloud as a fundamental strategic part of its IT strategy, and so. And part of that has to be the core banking engine. You cannot do the rest of you cannot do risk, you cannot do fraud, you cannot do compliance if you don't do the same thing with core banking. So we committed ourselves to doing that, and then we worked with the team, proved that it was going to be. We learned an awful lot from Chase as well, because I mean they give you the requirements of how a large bank really works, which is tremendous. But we also know that that at many levels the banking industry is an industry about confidence, and consumers and retail customers need confidence in the bank that it's going to be there, and likewise, in a similar vein, that the banks need confidence in the platforms that we sell and that they're going to use for the heart of the bank are really going to work. So not only is it good that they endorsed it, but of course it helps that the more banks that use the platform and the more banks that endorse it and the more banks that put their reputation behind it and back it, the more reassurance that gives to the next set of banks that we engage. So it was a great deal. That JP Morgan Chase are also a shareholder, which is great to have them on board. And it's one of the it's one of the biggest. It was probably the biggest commercial milestone of the company to that date.
Right, and of course there have been many other milestones. Perhaps you could just very briefly just give us some kind of key indicators in terms of what you can share in terms of valuation, revenues, growth, and your path to profitability if you're not already profitable.
Yeah, I'll give you some answers. So, like many private companies, we don't talk about it much, and it's not that there's anything to hide. It's just that there's no benefit towards it. But just to give you some numbers that I can talk about. So, in terms of number of people in the company, we're about 500. We're going to grow to about 700 in the next year or so. As I said, we're operational in more than 18 countries. As of today, I think we've signed something like 30 banks, 30 banks, and of that, about 10 are very well-known tier one banks, but the customer growth is continuing very, very quickly. So we expect that number to easily double in the next 12 months, and those are the main things. We announced our Series C funding in a few months ago. I think it was in November that we announced it, which gave us a post, a greater than $1 billion valuation. So that has happened, and I'm happy to say that the investment community looks very brightly in Thought Machine. So the valuations and the share price is going up, which is good for the company because it gives us the financial resources we need to expand and become a global company. We need to do.
Sure. So look, that's great. So that's a bit about Thought Machine. I want to get to know Paul a little bit better now. So Paul, you've told us that you're in New York, but you grew up in Northern Ireland. Tell me about your earlier years, your formative years. Was it an entrepreneurial family? Was it kind of I don't know what a bog standard middle class kind of lifestyle was back then, but maybe tell us a bit about kind of your life then.
Yeah, I regard myself as having a very happy upbringing. We grew up in Northern Ireland, and we grew up in Northern Ireland in the middle of the Troubles. So I was born in 1967, and I certainly saw, as a child, when you're a child, everything you see seems normal. So seeing soldiers in the streets and seeing guns and bombs just didn't bother me, and it didn't bother most people in a way, because there was ways of just keeping out of trouble. But certainly it was unusual. But it also, I think, it taught you a very good sense of perspective in life. That there's a lot of bad stuff is going on, that you learn not to complain about some of the smaller things. And I think everybody who grew up in that era in Northern Ireland has a level of resilience that you just don't have if you've grown up in a place that's completely far from conflict. But that said, it was a very happy upbringing. I mean, one of the benefits is the terrorism completely depressed the property prices, which meant that a completely average family could buy a fantastic home. When we had, I grew up in the type of home that in a city like London or Paris or New York would be considered to be for rich people, but it was just for completely normal people. So that was good. But we cannot exaggerate how much the world of business has changed in the last 20, 30 years. When I grew up, the idea that anybody would really start a company again from scratch and build something international just wasn't part of it. It should be part of it, because Belfast had 100 years previously had great international engineering businesses, most famously, of course, Harland Wolff, which built the Titanic, which is one of the world's biggest and most successful shipyards. It had an excellent aerospace industry in Shorts Brothers. It had a textile industry, and so there there's nothing in the people, there's nothing in the location that made it that made it a place not to do business. But by the 1970s and 1980s, it had all gone, and it's not just in Northern Ireland, of course, in many parts of the Western world, the kind of, the fire in the belly of the entrepreneurial spirit had just kind of really disappeared. But of course, not in Silicon Valley. And in Silicon Valley, and in America in general, there was always a very free market entrepreneurial spirit. And but that was not a world I grew up in. And then so I grew up in Northern Ireland. I was pretty good at school and went to university and did a PhD and did various things like this. And I was, I was a university academic for quite a long time and was reasonably good at it and quite enjoyed it. But, very late, probably in most people's career, in my kind of early 30s, I started my first company. But it was, I had no idea what I was doing. I mean, absolutely no, beyond having no idea. And but it's funny, even though I didn't have any idea, as soon as I was into it, I knew it was for me. And 20 years later, I'm still doing it in various forms.
Right, and you have a PhD in linguistics, which I think you parlayed into your startups, and I think later you, if I'm right in what I read, you led the team responsible for launching the pioneering kind of text-to-speech system at Google. Does that mean that the kind of speech output that Google uses when you call up its virtual assistant or whatever is basically you behind it? Obviously not the voice itself, but kind of your brains and your team that was there at the time?
Yes, that's exactly it. So I was installing, Google Wi-Fi in my new house at the weekend, and all the little speakers are chirping at me, saying, telling me about the weather and telling me that they're connected or they're not connected, or I need to do this or I need to do that. And they're all chirping around the house, and all those, and I can ask it questions and it can give me answers, and all that was based on technology done by our team and very hands-on. So I wrote a lot of the code, and my team wrote a lot of the code, and it's still in there, and I can still hear the good bits and the bad bits every day, and it's on all the driving directions for Android phones and all on Google Maps and everywhere. So yeah, you're right. It didn't use my voice. So you pick a real person and you model it on that real person's voice. And I'm pleased to say we spend an extraordinary amount of time picking the person's voice. And but I really do like the voice. It's a very soothing, professional voice to listen to. But yes, I mean the first 20 years of my career, 25 years of my career were spent in speech technology, which I loved, but which was very complex and very specialized, and I spent an awful lot of time becoming experts in a very very niche field, which thankfully paid off when Google came knocking.
Right, I can imagine almost like speaking to a child. You can tell the assistant that you taught it everything it knows almost. But look, Paul, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Thought Machine co-founder and CEO, Paul Taylor. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Paul, I want to talk to you about the future of finance. We mentioned it briefly just before. Just over a year ago, you raised $200 million to become the latest fintech unicorn. Given the falls that we've seen in valuation for some fintechs, is the fintech story running out of puff? Do you think we've kind of hit peak fintech unicorn?
No, certainly not. I mean, there's multiple parts to that question, and I think it's a good question because we need to kind of pick apart what's there. First of all, that there is, there is always kind of slight inflationary or bubble like tendencies in any market, because the issue is, if a company wins big, and the returns can be enormous, so therefore people are willing to either consciously or subconsciously are willing to put an inordinate sized bet on a company that they believe will win big. And if they are wrong on that, they would still rather be wrong and catch one of the ones that does get to be extraordinarily big than they would be to be right on every single bet. So in the kind of tech community, you really have to pick that apart, saying, is your goal that every single investment gets a return, or is your goal that you just make sure that when there is a winner, you're there? And that is one factor that drives the other parts of the behavior. But there are multiple bubbles all through history and things like this. But I mean, when you look at a company like Thought Machine, its revenue is increasing, pretty dramatically year on year. It's signing very large contracts. It's signing very long-term contracts. Many of our contracts at banks are 5 or 7 or 9 or 10 years. And so we're not going away, and there's no kind of there's no hype associated with it. However, I mean, you expect up and downs in valuations, and just because the market got very frothy doesn't, I mean, in many situations doesn't affect the underlying company. Now, as you know, in some industries, if the stock collapses, that can have a knock-on effect on the operational performance of the company, but rarely in tech companies. So if the price goes up and then goes back down again, it just means that there was a period of irrational exuberance, which is now ended. But the fundamentals are always the same. You need to build a company that's got a fantastic market, it's got a competitive edge, that grows. At this stage, at least 50%, 50 to 100% year-on-year revenue growth. And as long as you're exhibiting those sorts of characteristics, you will do well and you will succeed. And occasionally you'll get a super valuation in the middle, but if you're a serious person about business, you ignore that and just get on with building the main company.
And in terms of the banks themselves, who are obviously your main clients, what are the biggest challenges incumbent banks are now facing
in the market? So all banks are facing the same sort of thing. They want to do the right thing, and my belief is that most of them will end up doing the right thing, which is they want to have a far more pure digital offering. And by that you have to have every journey in the bank digitally operated. So one thing that the B2C fintechs have done well is that it's not just the kind of, make a payment, look at your balance sort of activity, which is automated. It is everything. It is onboarding, it is offboarding, it is making payments, it's having disputes, it's challenging things, it's sending messages. And if you have everything automated, then you really can change the cost structure of the bank. And I think that many of the big banks are still struggling with this, that they have a happy path digital journey for the customers, but they do not have the full journey mapped out, and by that requires a lot of people and a lot of cost. So a lot of banks, they're frustrated that there's still a lot of cost in a bank that they really do not think is going to value add activities. It's really just going in to run the bank. So that's a large part of it. But I also think the traditional banks have got an awful lot to bring to the table. They are by far the best at managing balance sheets. They are by far the best at assessing risk, and they're by far the best at really knowing how to build a balanced universal portfolio. I mean, a bank, some fintechs have somewhat learned the cost. A bank, you can't not run a bank on one side of a balance sheet. Now some try, but they don't. To me, they don't do very well. So in other words, they have a lending product, but they don't have a deposit-taking product. So you cannot lend without deposits. So what do you do with the deposits? Well, you either don't do it very well, or you have to go to wholesale markets and stuff like that. And conversely, they have a really good digital wallet solution for storing money. But once the money's in there, what's it doing? It's not earning any return. So large banks they're extremely good at the universal aspect of managing both sides of the balance sheet. And in doing so, if they can combine that with a really excellent customer experience, then they should be in a good position.
And Paul, just briefly, if you can, we've seen inflation accelerating around the world, rates are on the rise. That's usually a good time for banks because it helps boost profit margins. Does that mean they're kind of more prepared to make that move to Thought Machine, for example, or does it mean they're more likely to just sit back and kind of see the money coming in and think, well, why do anything if profits are rising?
Well, so any bank that thinks that the profits are always going to rise all the time is pretty foolish, because the previous financial history, if you just look at pick any bank you want and look at their numbers over the last 20 years, there have been some good years and some very tough years. I also think that you're very naive just to think that the competitive landscape is going to sit there. As you know, classical economics, if you're making a lot of profit, what's that going to do? It attracts other people to the industry. And you're right, they've had a bumper year. Now, so of course, a lot of this is flattered by them being able to release provisions against bad loans, which were pandemic loans, which didn't occur, right? So it's a funny year. That said, but it is that most of the banks we talk to, they know that they need to get off they still need to address the cost base, because competitive pressures will come along. And what's more, it is better to use the profits to reinvest in building the bank of the future and building a better bank than it is just to pay just to pay dividends, which of course is a valuable part of the equation. But the idea that you're having a profitable year means that you can be lazy is not a good strategy. I don't know any. No, it does happen, but I don't know anybody. If you got McKinsey or Boston Consulting Group in and that was their answer, you're making lots of money, just relax. I don't think it would really enhance their reputation.
Yeah. They've earned their crust by going into banks saying that now, I'm sure. Great. So, Paul, look, it's time now for our rapid fire questions round. So, are you ready?
Yes, I am, yes.
Okay, great. So just one-word answers, or just very, very quick answers, because I know we are kind of running out of time as well. So look, many fintechs we know are very well funded, but don't necessarily make much, if anything, in terms of profit margins. Is this normal or something we should worry about?
Very much depends on the nature of the business. You asked before another question. What fundamentally matters is that you've got a plan in the business that shows the upward trajectory of revenue will fundamentally exceed the cost at some future state and stay there. That is what is important.
Right. And from your perspective, what fintech segment, aside from yours, has the biggest potential over the next 5 years? You can pass, I guess.
That's a very good question. No one's asked me that one. I would say I still believe that the retail banking sector is still going to be, someone's going to really make it big there. Someone new. Right.
Okay. What's the biggest pain point in your everyday financial life that you'd like to see taken on or changed or resolved?
Just having a holistic view of all my bits and pieces. As I get older and somewhat more prosperous, the amount of pots that go around everywhere is just untraceably large. So,
right.
If I struggle with it, and I kind of know what best practices are, I can imagine everybody else does too.
It's a good problem to have. Do you think we are at the beginning, middle, or end of the kind of fintech wave? Let's call it.
The beginning. And I would say we're at the end of the beginning.
Okay. Do you have a metaverse strategy?
No.
Do you think? That's okay.
I'm quite happy in the real world.
Do you think EU and US regulations today have adapted enough to kind of handle new possibilities and behaviours that we're seeing in the financial industry? This can just be yes or no answers. It's fine.
Yes.
Okay. How would you describe NFTs? A scam, B, an interesting concept, or C, a part of the future that you mustn't miss out on?
Nearest the first one.
A scam.
Not so much a scam, but a delusional world of fantasy. Shall we just call it that?
Have you ever invested in crypto?
No.
Okay. And are physical points of sales part of the future of finance?
Perhaps, yeah, perhaps, but I think the friction will reduce to next to nothing, and it'll happen on any device. But there's always something to be said by having physical tokens.
Okay, and this was just a few kind of parts to this question. On a scale of 1 to 10, 1 being the lowest, 10 being the highest, and therefore the most likely, how would you rate the chances that in the next 10 years the following are likely to happen? So, one of the neobanks will be as profitable as a top-tier legacy bank.
8.
CBDCs become a mainstream reality in the US or EU and not just China?
What? Sorry.
Sorry, central bank digital currencies, CBDCs.
Oh, 4.
You'll be able to open a crypto account at a top tier bank in parallel or even instead of a normal kind of cash account.
9.
Swift will still be the main tool for transferring money around the world.
Yeah, 9.
A new rival to kind of the card oligopolies, Visa, Mastercard, UnionPay, Amex will emerge.
6.
And finally, that we will see a top tier bank or insurer bought by a fintech.
Oh, 10.
Okay, well, maybe it'll be Thought Machine, but we look forward to seeing what happens. Unfortunately, we are out of time, so I really just want to thank you, Paul Taylor, Thought Machine co-founder and CEO, for taking the time to join us today.
Thank you very much. It was a pleasure.
And for those who are watching, we will be back again next week with another big name from the world of finance and technology. We do hope you'll join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. Hope to see you next time. Bye-bye.